So let me start off with some goodies that we need to know about, and then I'll kind of jump into this. I'm not used to doing this so early in the morning. I'm used to kind of doing this with Craig at 1 p.m., but So U.S. futures surge Thursday. Morning, Franchi. How are you? Investors still waiting the outcome, but I think we know what's going to happen. And by the way, I told you guys what the market was pricing in. How long ago, Craig? Like a month ago?
Yeah.
I've been saying it for a month now. So if anybody's really surprised, didn't get my AARP card in the mail yet. Not yet. All right. So European markets open higher. Asia gained. We're still waiting for. We're still. My wife said that if Biden wins, she wants to build a built-in pool. Oh, all right. Sounds good. So Congress is likely, again, to be split between Democratic House, Republican Senate, and that's going to keep U.S. taxes, other policy relatively stable, which is one of the reasons market is rallying. Now, folks, share prices tend to rise regardless of who's at the wheel. I'm going to tell you that right now. The biggest factor is alignment between the Senate and the president, which we don't have right now, and we didn't have for the last few years. So that's not a major factor. But I think we're going to get more aid with Biden and more assistance with Biden running than with Trump. I mean, that's what Democrats tend to do. So I don't see the stock market really coming off of this. And as I said a long time ago, what happened in February and March of this year is a lot more shapely to the economy than what we're seeing now. I want you guys to get a piece of paper and a pen. I got a lot of goodies for you today. The expectation that Biden is winning is raising hopes that U.S. foreign policies may be more clear. That's another nice way of saying no tariffs. That means small caps will rally again, which is why they're above the 200-day and the 50-day right now. Now, jobless claims are still a problem. And I'll get into that in a minute, where Craig can go ahead and click on it right now. It's not ideal. The numbers within the 4-week moving average, but the problem is we've been there for quite some time now, and it hasn't been moving lower. England began a 4-week lockdown today that'll keep all shops selling items deemed non-essential, such as books, clothing, closed. Scotland, Wales, Northern Ireland are going to be doing the same. Bank of England announced monetary stimulus by a bigger than anticipated 150 billion pounds for obvious reasons. Now, this is what you guys need to pay attention to. Thursday's rally, what we've had overnight, S&P rose to the best day in 5 months. Nasdaq, biggest gain in 6 months. Traders doubled down on tech. That's where the big thing is going. Stocks are seemingly immune to pandemic shock. Looking ahead, Republicans are going to continue controlling the U.S. Senate, and that'll stymie agreement and fresh infusion, but it's not going to get worse than it was. We're going to see more money coming into the country. There's no question about it. It's probably going to happen sometimes if I had to guess, it's going to probably happen sometimes next month or in January. Now, that could add pressure to the Federal Reserve to do even more to support the economy. And we're going to see the FOMC meeting data today. Usually, markets are subdued going into the FOMC, as you guys can see, but all bets are off right now. Now, the Fed is meeting this week, today. Well, actually, the minutes are coming out today to announce its latest decision, but we already kind of know what they're going to do. Now, so that's looking at the market. But I want to show you guys something really interesting. Look at the data that came on Monday. Remember what I say, manufacturing is the biggest sector to rise after the election. Let's look at the numbers that happened on Monday. Look at the PMI manufacturing index. Outperformed. Let's look at the next one. ISM manufacturing index. Outperformed. Go ahead. Continue, Craig. Construction spending. Now, keep in mind, this, don't get panicky here. This takes into account commercial and residential. Residential's killing it. Commercial's not. That's why you have a mixed bag here. Let's continue. Factory orders are solid. Now, what is this telling us? That's telling us, remember something important, folks. A lot of the parts for whatever's made in USA is still made in China. The fact that manufacturing is going up and the fact that factory orders is going up is telling us that China may not be giving us a load of crap about their recovery and about lack of lockdowns. It looked like whatever they did back in March, April, and May seemed to have worked out. So they are on track right now. They're not lying to us. I could tell that based on the data that's coming out because they would be stagnating us. I want you guys to understand that. Let's continue, Craig. Now look at this. Somebody's calling me. It better be in a national emergency. Nope, it's not a national emergency. All right. So again, I like the numbers. I like the numbers that are coming out. I don't like the jobless claims, but I like the manufacturing. I really, really like the manufacturing quite a bit. So let's move on now to momentum and to the other levels that I wanted to talk about. Yeah, the momentum levels are fairly stable right now. We're not in extremes. We're still heading lower, but they are stable. There's nothing overdone right now. There's nothing really moving us from top to bottom. So you don't need to focus on it right now. And it also means the market can move for a nice stretch higher over the next few weeks. Let's look at the S&P, the Dow, and let me give you guys some levels. All right. As you guys can see, we are now 2 days above, close enough to being 2 days above the S&P 500. I am still nervous because I want us to break above the September 2nd high. I don't care if we pull back, but I want us to break through that September 2nd high. So the level that I'm setting on the S&P is right at 360, I think, or give or take, but right at that level, right at the 360 level. I think if we can go a little higher, break above it, and then cool off, we will have some buying opportunities there. But 360 is the S&P's back to bullish levels. Until we get to 360, I'm still going to be very nervous about this because the market could be setting itself up for a shakeout. Although I don't think so because momentum levels are fairly stable right now. Yeah, but that's the level, right at the 360-ish level. Let's look at the Nasdaq now. On the Nasdaq, we still, the level on the Nasdaq is right at around the 302 level. And I like that level quite a bit. I think this is going to give us some upside in the coming days. Now let's look at the Russell. Now, the Russell, I've been talking a lot about the Russell, and the majority of the stocks that you guys are going to be seeing today are in the Russell. It's not a coincidence. I think here's the deal. For those of you who are new here, for those of you who don't understand this, for those of you who don't want to understand this or don't care or haven't been able to understand why I'm so big on the Russell. If we get the Democrats tend to be a lot more supportive of smaller companies than larger companies. They tend to overregulate large companies, but they tend to want smaller companies to become bigger companies. So if any companies are going to get any type of stimuli or a break from Democrats, it will more likely be smaller stocks, and these are smaller stocks. That's number one. Number two, the S&P right now has a PE ratio that's double what its average PE ratio is, and it's sitting near all-time highs. The Russell, as Craig will show you, is still sitting below highs of a year ago. All right. We have not been able to take out highs of January of last year, so 11 months ago. If you can just go, you're already there. Yeah. So we have a lot of pent up. Now, the reason the Russell has been cool in comparison to the S&P and the Nasdaq is because of the trade war. Because the smaller stocks are impacted by the trade war a lot more than larger stocks. Why? Think about it. If you cut someone's leg off, right, and they have 3 legs or 4 legs or 5 legs, their foundation is strong, they could withstand. But these are smaller companies. They're one-trick ponies. They don't have the market capitalization. And also, there's a good chance a Democratic president will tax the smaller companies less than the larger companies. And I'm okay with that, actually. I don't have a problem with that. The bottom line is these smaller companies will be the Amazons, the Netflixes off tomorrow. And they're not tiny. These are $1 to $5 billion companies. Okay, so let's not get, these are not mom and pops. These are not penny stocks. This is Amazon 20 years ago. This is Netflix 15 years ago, and so on and so on. So again, my bet is on the Russell, and especially with it bucking the trend, the fact that it outperforms the S&P. Here's something you guys should know. These stocks outperformed the S&P 500 6-1. Also, when you have a 3-year period where the S&P outperforms the Russell, the Russell tends to lead for the next year. We're there right now. The Democratic president that we're about to have, the fact that the type of economy we have right now is better for smaller, more disruptive tech stocks and biotech stocks and other type of stocks. There's a lot of stay-at-home stocks that we're about to look at that are in the Russell. And again, everything is pointing to strength in the Russell if, in fact, Biden takes the ship. And it looks like he's pretty much done. I mean, Trump is graveling, but he's done. And again, the market told us that. And it's been telling us that for quite some time now. The only thing you needed to do was listen and be objective. And I think we've been very, very objective. Let's look at the bond market real quick, Craig. Democrats are going to be more restrictive with money from the type of money that bonds for influx of capital moving into the economy. So I think we're going to see bonds I think bonds are going to be setting up for possibly a little bit lower yield than we are seeing right now. And I think we're going to have to see what the Fed says. I think the Fed is going to be giving us some guidance, but I don't think the Fed is going to be under as much pressure. Problem is they've kind of locked themselves in a corner. That's the best way I could put it. They've locked themselves in a corner. Let me give you levels for thank you, Greg. Let me go back to thanks, Greg. Thank you. I forgot about that. Let me give you levels here. In this case, I think, can you go 3 months, Craig?
Yeah.
Yeah, I would look at the 165 level. I would look there. I wouldn't go that much. Once we hit 165, all bets are off. All bets are off. Now, let me give you guys some stocks, and we'll look at the profile of these stocks, and we'll look at the performance of these stocks, and we'll look at what they do and where they're at as well. We're not just going to look at the stock. And for each of them, I will give you what I think is a good idea. Now, Craig, do you remember when I gave NEO first time?
Oh, it was a while ago. I can look it up.
If you don't mind, really quickly. So, folks, in our regular VIP room, I gave most of the stocks I'm going to talk about today. And a lot of these stocks we put a date when I give them for the first time or whatnot. And sometimes I like to look after a stock. Just makes me feel better. Let's take a look. See here.
Wow. Right there on 619.
So we tripled our money on it, huh?
If we were to get out. More than that. 725 up to 38.
Yeah. At this point, that, folks, my VIP program, what am I going to tell you? 30, I would say a pullback to the 30 level, maybe 33 level. I wouldn't be buying it right now. I think it's overextended, but I like this stock. Let's look at the next one. Oh, yeah. When did we give this one, Craig? I kind of like it now, actually. But when did we first start talking
713.
When? How long ago?
713.
Really? The first time?
Yeah, right there.
Where was it?
79.85.
So it about doubled.
Double.
Mm-hmm. Nice. I remember people were telling me it was overbought when we were doing that, but I guess it wasn't. Let's continue on our quest for adventure. I like the stock a lot, especially with remember folks, Biden is going to be a lot more cautious. He's going to be we may have stay-at-home orders again. He's not going to be iffy-washy. He's big on protecting us. So I think he's not as big on the economy as Trump is. He's more big on protecting us. So we are going to have a part 2 of what we had last year. Can you go to profile of this stock?
NLS?
Yes. Now notice it's a Russell 2000 stock. Sporting good, athletic goods is a very, very good stay away from me stock. Look at what the growth rate, what it gave us this year alone. Do you see it, Craig? Do you see one of the reasons why I like it so much? If he knows where he is, that's true, Scott. A very good point. Yeah, he's a little, let's just say he's getting a little old. Yeah, so let's look at, stay at home is good right now. Stay at home and sporting good is the same. Stay at home meaning stay away. I don't use the word stay at home. I use stay away from me and stay away from me. Let me do my thing. So if a company helps you do that, like this company, that's a good company. People are working out right now. People are doing things that are isolated, like working out. Home gyms are hot right now. And again, Russell 2000 stocks. Let's continue our quest for adventure and more hot stocks. Now, I recommended this stock a long time ago. And when I recommended it, I found it with 13F filings. Do you remember the date, Craig?
Yeah, I just 521.
Let's see. Oh my.
Right there.
So we doubled it again, huh?
Yeah, I remember this one.
Yeah. Do you guys are you guys seeing a pattern here? All right. Very hot Asian stock. Go to the profile. I want people to see what it's doing. Internet service provider but look where: Taiwan, Vietnam, Thailand, Philippines, Malaysia, Singapore. Do you guys see that? That's a hot stock. Look at the 1-year return. Do you see that, Craig?
Yeah.
We only caught 100% of it. But anyhow, let's continue. And is it a, can you go to real quick? Is it, no, it's not. I don't think it's, no, it's not it's a larger stock. It's not a Russell stock. Another good company that should see more upside, especially with what we're seeing right now with the, with this TV, with the way TVs are used, with the way this internet entertainment is huge in Asia. And if we have a lockdown, watch out. Another one in Asia, oh, watch out. Let's continue. Folks, are you writing this down? Are you taking notes? Is anybody paying attention? I want to make sure you guys are getting this. Go to the profile of this one, Craig. I like this stock right now. And Craig, feel free to use any of these for, for the boot camp.
Of course.
All right. Look at this, 400% return. Silicone timing solution, Russell 2000. Sit time. I like this stock. I like this stock right now. Smaller chip stocks, very, very good. Now remember, how much did this SPY give us this year, Craig?
I'd have to do the math.
No, you don't. Just pull in SPY and look at 1-year return.
Oh, yeah, you're right. Duh.
Just over the year. I just want to see what it's given us over a year. Does it give it to you? Let's see here.
No, yeah, it does.
It does. There you go. Yep, 13%. Okay. Well, we got a benchmark here. Scott, that's why you have to do it the right way. You have to wait for it to base out. You have to have a stop loss. You have to not get a lot. That's why we have methodology for it. All right, let's look at the next one. Now I've been barking up this stock for months now. Do you remember when I first started talking about it, Craig?
I can look, but I know we've traded in billionaire breakouts several for months.
I think I've talked about the stock in March, probably.
Well, you may have, but last time you brought it up was May 12th. in the trade room.
All right. May 12th. Fair enough. Pretty good. Like 30 points.
Yeah, from 58.
Oh, no, more than double.
150 points.
Okay.
52.
All right. This is a solar stock, folks. Solar energy. And look at it. It hasn't, and this is what I was saying last few days. It hasn't really bucked much. It's been kind of just congesting, and now it's up. Yeah, this is a stock that's going to get a lot of love from the Biden administration. A lot of love from the Biden administration.
I like this stock a lot, actually.
You do?
Yeah, we traded in billionaire breakouts several times.
All right, let's continue. I like this stock. Does very similar thing to the one that Craig likes. Maybe a good pullbacks, Craig, for PP.
Yeah.
Just something to keep an eye on it. But I want you to keep a list of these, because these stocks are the ones I'm showing you guys are really set to move. They are really set to move. Let's go to the next one. I think we only have a few left. Oh, Plug. How many times have when did I first talk about Plug?
I know, just recently you brought it up.
No, I know. But I mean, like, do you remember it was like March, April?
6/19, 6/16, 6/16, June 16th.
Where was it?
June, right there.
So we tripled.
$5.50, 543.
So we've tripled on it, eh?
Yep.
All right. And this, folks, is a Russell stock. Now, Net, I love this one. I talked about this one months ago. Go ahead. Yeah. When did I talk about Cloudflare? Back in March, April, before we started keeping track of things, right?
Yeah, I think so.
This is a really good stock. It indirectly benefits the stay-at-home economy, because what it does is, if you have a website, we use the service at WealthPress, and I've used it for years. So let's say you host your website in New York, and somebody from Australia is trying to look at it. It takes a long time to load. What this company does is they provide servers, mirror servers all over the world for your website. And then when somebody clicks on your website, it automatically takes them to the closer server and serves your website from there. Pretty cool, huh, Craig? So it doesn't load, so it doesn't take a lot of load on your website. It's really a really good company. Really, really good company. So Teresa, is this boring you? We're like totally going through. Are you guys getting value, or am I putting you guys to sleep?
She might be exhausted from staying up watching the election.
That's very true. Yeah, that's very true. Election is making me crazy. Good. Yeah.
Yeah.
It's making me crazy too. Yeah. Cloudflare, very good company. And the more the stay-at-home economy or the internet gets popular, the more use is going on the internet, the more we will need this company. And there's not a lot of company. Yeah, I haven't slept till Monday night. I know. We're all in the same boat. That's why I'm a little. So yeah. So is this? There's one more, right, Craig?
Yeah.
When did we? Wait a minute. Do you remember when we talked about Net for the first
time?
Yeah,
6/19.
So it doubled.
37.
Almost doubled. Chris says very informative, amazing input. David says you recommended BE Bloom Energy. I'm still recommending Bloom Energy, and it's down. Wait a minute. Let's go to the blue. I want to see, did it hit the 200-day moving average and EXPI? Let's take a look at that. I think let's take a look. When anything passes the 50-day moving average, we don't hold. This is why we review stocks, folks. I never, ever, 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 ever hold stocks that are below the 50-day moving average. I would never, ever, ever, ever do that. And then let's look at EXPI. Yeah, David, my insight would be never to hold it below the 50-day. I mean, I would never, ever hold a stock below the 50-day. This one looks like it's turning around. I would have liquidated it, and then I would start looking to buy it again.
Well, just don't forget, David, when Roger recommends it, that doesn't necessarily mean jump in and buy it.
Yeah, it's a stock that we put on our list, and then Craig looks at it, and then we have a system. We have a
pullback would be a place to get in this area on a pullback to that 50, for example.
I always say I recommend stocks for 3 to 6 months window. Yeah, so you can research at home. So Craig can give you the buy and the sell, all of that stuff. CRM, let's look at CRM. Was CRM on my list?
You've mentioned it before, yeah.
Oh, many times. No, I mean today. I don't remember it being today.
No, it's not on the list today.
Yeah, well, here's the problem with CRM. Here's the problem. What is the problem with CRM? Right away, the biggest problem with CRM. It didn't take out the September 2nd high. By the way, did the stocks that David mentioned, did they take out EXPI and BE? Did they take out the September 2nd high? Yeah, this one did.
Yeah,
this one did. Okay, this one
it's
did.
Just correcting.
Yeah. By the way, when did I recommend these stocks? What price were they at? Just out of curiosity. Yeah, you need to know, David, when I say buy a stock, when I recommend a stock, I always say 1 to 2 quarters. And by the way, how have my stocks done in 1 to 2 quarters, folks? They've doubled or tripled. Tell me I'm wrong. I mean, I'll show you the dates. Craig has a calendar. We write. I mean, you guys, I don't have to tell you guys. You guys have been in my program. Most of the guys here have been in my program for years. You guys know the routine. When did we bring this up?
You brought this up in the VIP room. Oh, no, that's BI. Hold on. BE.
Teresa says double and some triple. Let me finish with this, Hugo, and I'll look at LI. I know I talked about both of these stocks 100%, but when?
BE was 10.5, and look at that. I mean, that was a nice little short-term gain there.
Right? That was a very nice gain there. 50% increase in price. And then
18 to
Teresa
20.
says she's growing. My gains aren't as high because I'm growing my money. And what was the other one?
EXPI.
That was like forever ago.
EXPI you brought up on 10.5 too.
Where was it on 10.5?
Right. Yeah, nice little gain. Still, it's $10.
13, but yeah. Anyhow, the point I'm making, you got these are David. These are not trades I'm giving you. See, okay, here's the deal, David. I want you to understand the difference. When I give you a stock, that's not a trade. A trade has an entry, an exit, a stop loss. I'm just giving you hot stocks that have the potential to double and triple. And most of them do, actually. They do, and some even go more. But the point is, you got to. I mean, you got to. We have a program where, like right now, I'm going to get off, and then Craig is going to go through the part that I'm talking about. Am I right, Craig?
Yeah, we can go through. We can go through these two if you want.
Yep. Yeah, and can you show us one more LI?
LI.
Yeah. LI. Yeah, somebody wanted to see LI. What is LI? Is it one of our stocks?
Oh, this came up. I think Lance brought this up, didn't he?
Then you got to talk about it with Lance. I don't know what this stock is. I don't remember. It may be one of my stocks, but I don't remember.
I think Lance brought this up.
Oh, DEC. Yes, let's look at DEC. I want to look at DEC. Thanks, Rick. Let's look at DEC. Oh, nice. We talked about DEC many times. When was the first time I talked about DEC, Craig? Like 3 months ago, 4 months ago?
In the VIP, it would have been before May in the VIP room. It's not in there, but I remember you talking about it, so it must have been before May.
Oh, Lance talked about it. Okay. Yeah, I've talked about this stock. Like this stock probably was near like $150 when I first talked about it. I love this stock. I'm actually going to buy another pair of those shoes this weekend. I love New Balance, but my wife, she's got something about these shoes, but she knows she's a runner. All right, you guys, I'm going to let Craig take over. You guys do what you need. And there we go. Let's see how we open before I go, Craig. Let's take a look live. And look, I voted for Trump, but what was I telling you? Who's leading? You got to be objective, folks. You can't let your biases lead you. They'll lead you astray. Go ahead, Craig. Oh, you're there. Man, you're faster than me today. Look at that. We're opening up 1.5. What about the Dow?
Dow.
I just want to see how many
Wow,
points
look at
we're
the
up.
Qs.
Yeah, yeah.
Same.
360. Thank you. Thank you, Scott.
Close.
I like the fact the Dow went to the 200-day, bounced, and I like the fact I keep in mind industrial stocks are part of the Dow, not part of the QQQ. I'm giving you guys a freebie right now. Basic materials, industrial stocks, they're in the Dow. The industrial and basic materials over the last God knows how many years outperformed the S&P by the biggest margin in the 60 days following the election. Okay? So I'm just going to leave it at that for you. All right? In other words, the safest stocks may be your best bet over the next 60 days. Statistically. I don't know that for a fact. I'm going by statistics. It's like a card counter. All right, Craig, I'll let you go. I'll talk to you guys soon. I hope you guys are getting plenty of value out of this. And don't go anywhere. We got a full day of surprises for you. Bye, Craig. Thanks for the help, and I'll talk to you guys later. Bye, everyone. Bye, Ingrid. Bye, Scott. Bye, Teresa. Bye, Ram. Bye, guys. Bye.
See you, Roger. Okay, so yeah. All right, Teresa, you can take a nap unless you want to listen to me ramble for a little bit. I usually have a few things, some insights to give every once in a while, anyways. So, okay, so David, are you still here? Let's talk about those two stocks. What was it? VE. Roger recommended on the 5th of October. So actually, see, this is actually set up where you could have actually gotten in. Hold on, there's the 5th right there. Yeah, this was on this day, you could have actually gotten in over here because this is really the first day. Ideally, earlier in the day would have been the time to get in. But you could have got in even on the next day at the open, because a couple things I want to point out here. Okay. You see this trend line. Okay, you got a pattern in here. And anytime, here's the thing, and I went over this yesterday. If you were in here, I went over it for a good hour from yesterday, from 1:30 to 2:30, right, guys? Just pretty much outlining, hey, this is where you want to take these trades, no matter who gives you a stock. If you're going to trade a stock, just because someone says, hey, look at such and such, here's a stock pick, Apple, whatever it is. It's like, okay, thanks. And then you take it and then you do your own analysis and say, okay, has it pulled back to moving averages in confluence with prior support levels? Is the RSI pulled back to near the 50 level? Okay. Because in a strong market, the RSI is not going to pull all the way back to 30 unless you get a bigger correction. So even here, it just pulled back to 33, 35, 35. So, and then here, it didn't even pull back to, it pulled back to at or near the 50 level. So, but you want to focus on price action and just use the moving averages kind of as to help you identify a good location. All right. So what you're looking for is, for example, this is the day that Roger recommended it right in here. We've already broken out. And this is like another just retest kind of kiss goodbye thing. So you could have actually entered the next day off the open, because it's breaking out above these resistance levels in here. And now typically the market will go the width of the pattern. Okay, so if this is the width of the pattern, you take it from the beginning of the pattern. So we'll take it from this high down to this low. That's the lowest low, right? And I'm going to take this and put this on the breakout area. Well, that actually pulled back all the way to there. So this gives you an idea of where the market's going to go. So you know that, okay, if this is the width of my pattern from here to here, right, of this pattern, I take this low, put it there where it pulled back to after breaking out. Here's your breakout. There's your pullback. There's your launch. This is a launching point. You put on the launching point. That puts me an area somewhere up in here. And I usually look to get out 10, 15%, about 15% in there. There's another thing you do, and we talked about this. Look at that. To the tick almost. To the tick. All right, when you draw fibs off your initial swing. And that would be like twice the measured move. So that would be 100%. So if you take this measured move, put it right on top, that goes right there. So this is a good area to take some profits off. So if you're trading the option, that's where you would get out of the trade. If you're buying the stock, you can still hold on to the stock until it like breaks this trend line. And if it breaks back above this trend line, back above 17, you can buy the stock again. Make sense? So if you're trading the option, you want to take profits. You don't want to hold on to those trades. One, because of time decay. Okay. EXPI. Does that help? EXPI. Does that help, David? EXPI, he brought up on the 5th. Again. Now, see, this is, at this point, it'd be like, okay, thanks, Roger, for the stock pick. I'll wait for it to pull back. See, it's making new highs on the 5th. So this is one of those scenarios where it's like, hey, great, thanks for the stock pick, but I'm going to add it to my watch list. I'm going to wait for it to pull back. All right. And this is what you're looking for. New highs, new highs, new highs. You're not doing anything. You're sitting on the sidelines. And you're probably thinking, golly, when is this thing going to pull back? Don't chase it. Okay. Then you get a little pullback here, you get a little pullback there. It's pulling back here. Okay. This is still sustaining downside momentum. Look at your 30-minute chart, or this is an hourly chart. You can look at an hourly chart. I'll use a 30-minute sometimes. I like the 30-minute. If you want to use the hourly, you can use the hourly. It's less noisy. Doesn't matter. Okay, we can stick with the hourly. And you have, whenever you see, this is a 21 EMA. Okay, this white one is an 8 EMA. Whenever the market, when you see the market moving lower and you see this, don't bottom pick. Okay, this is sustained downside momentum. Don't say, oh, there's support there, I'm going to buy it right there. Okay, you're ran over. Okay, you're going to get totally ran over. And you're moving average here, right? Sustained downside momentum. Don't try to bottom pick until you see the downside is done. You want buyers to come back into the market before you start thinking about it. You're not going to get the low. You're never going to pick the low. Every once in a while, you might get lucky, but you don't want to do this. Okay. More often than not, you're just going to get ran over and you're going to be like, oh my gosh, I hate this. I ain't doing this ever again. What you want to do, and here's the thing, typically you have measured moves in here. Typically at normal ebb and flow on downswings will look like this. You'll have equidistant, you'll have a short one, and a long one, and then a short one. You might have a long one. I love this right here, actually. Or you might have 1, 2, 3, and then a long one. And typically the move from here, this move is equidistant with that move there, right? These are equidistant typically. All right. These are equidistant typically, and these two moves together make up this move. You know what I'm saying? And typically that's equidistant with these three together. Make sense? So what do you have here? You have a move down, pull back, and then it's a big drop. And sometimes it's three. This is about three times. One, see? From here to here, it's about three times, right? One, two, three. It's about three times. And then you have that same move from here to here. So it's just familiarizing yourself with these patterns. Okay, and you know that. Okay, look at this. Watch this. Dupe. Dupe. Okay, it took it out a little bit, but that tells us, okay, somewhere right there. Dupe. Or even that's where the first pullback is. I'd go with that. So we know that somewhere down in here, we're probably hitting extreme. So this is like 2.5 times about, I guess. And then also we have positive divergence here. We got new lows, positive divergence. Okay. Now, one of the things, now this is very powerful, what I'm about to tell you. Okay. And it's definitely something that you want to, I do this on trading futures, and this is what I'm looking for before I try to pick a bottom. It's called a 3-drive pattern. Okay. You get a, right, guys? If you've sat with me in the trade room in here, you know exactly what I'm talking about. Here's one, pullback. Here's two, pullback. There's three. More often than, and then you have positive divergence. More often than not, now the downside is done. Okay, and we can either bounce in here, go sideways, potentially reverse, that kind of thing. So when the market popped up, notice we took out actually all these highs. Okay, but just because of the fact that we took out this high, this last high right there, here's your 3-drive pattern. 1, 2, 3. Actually, that comes up here. Sorry, I didn't see that. Once we took out this high, after that 3-drive pattern, after an extended move like this, a sustained move, you can buy this, okay, or buy the pullback to here like this. Notice how it held. This happens all the time. Notice how it held that right here. It traded down through it, couldn't do it. But anywhere in here is a good buy, anywhere in there. And yeah, you took a little bit of heat. Your stop's below the lows here. And what you can do is go like 25% of the ATR. Sometimes we'll go 10%. Let's see what 10% is. So the ATR on this day is, well, you got in on this day. So let's see what the ATR is. ATR, it's close. It's like $4. See this down in here? It's like $4. So 10% would be 40 cents. So you go 40 cents below this low. What's this low? 41.12 minus 40 cents is what? 2987. 40.72. Low was 40.82. 40.78. You just missed getting stopped out. You can go 15%, 20%. I wouldn't go more than 25% of the ATR. But if you want to be more, I would go minimum 10, anywhere between 10 and 25% of the average HTR. You subtract that from that low, that swing low, and use that for your stop. Make sense? And then targeting. off that initial swing. I'd keep it conservative. I know EM a new high here. I just keep it, if you stick with this, it's more conservative. You know, if you're long in here, right? You want to look at where 50% is too. Let's put 50% on there off the entire swing. That's where you can start looking at 2/3 of the position, or even half. So if you're long in here, you know, look at this. You got confluence with 50% with that right there, which is actually twice this measured, that net industrial swing off of, you know, with a 50% pullback. So you can look to take off, you know, 2/3 or even a third there, a third there. And then that would be a third there, a third there, and then look for your other third up at the top. That's how usually I'll take profits. If I enter long in here, that's about 1-to-1 reward to risk too. I'm taking off here, here, and here, which is, if I'm long around 50% of my initial swing, I'm taking off there, just below that, and then I'll go further for my other target. And then if the market gets up here and starts to balance, I might, you know, up at this area, I might get out. But at least this way, I'm originally, you know, if the market just boom, it hits it. You know, if it comes up in here and balances, I might get out. All right. So yeah, that's how you want to trade that. And you know, you don't want to be buying up in here when it's making new highs. Okay. So just because Roger recommends it, or if anybody recommends any stock pick, say thanks, and then add it to your watch list and go look. And you know, if EA recommends it here, oh, this is great. Thanks, man. Thanks a lot. Appreciate it. I want to buy it. Okay. But if he recommends it here, no. Okay. All right, David, I hope that helps. Scott, about the safest spot to buy the Dow. Same thing. Just you guys can do this. Do the same. The safest spot is down here, you know, or on this day. Wait for it to pull back down, you know, or if it breaks, if it continues to go higher, wait for it to pull back to the moving averages. Okay. And then do that analysis when it pulls back to those moving averages. Typically what you're looking for, you know, is also your 60-minute, the RSI to be, you know, coming up out of extremes off the 60-minute chart. Dr. David. DocuSign. Let it pull back. Use what I just did on here. I showed you what to do. So just pull up your charts and start and look at this and do exactly this, and you'll nail your entries, and you won't take much heat if you let it pull back to the moving averages like that. Teresa, can I get a trading lesson where you can log into my account and help me fix it? Learn how to get some options. Send me an email about that. Send me an email about that. Okay. We'll see what we can do. Joseph, good morning. What is the chart tool that I saw a guy use that one measured move? What are you talking about? What is the chart tool I saw a guy use that one measured move distance of an uptrend to predict 61% with bull? I haven't. This is client projections. Probably Fibonacci's. Probably Fibonacci. Probably Fibonacci's. And then he's got, you know, something like this. And I gotta leave in about 10 minutes. And then who's coming on next? Jeff Yestein's coming on. All right, let me get Jose in here. I gotta give him. Oh, he's here. Okay. Okay, Jose, if you could hear me, go ahead and raise your hand so you come up to the top of the list, and I'll add you as host. There you are. Thanks, Jose. All right, you're in here. Cool. So, yeah, with Docu, again, let it pull back. Watch yesterday's session. I don't think we have the recordings done yet. So the recordings are done. We just have to produce them and upload them somewhere. But honestly, and rewatch this session when it's available. Joseph, yeah, it's probably Fibonacci tools or like Fibonacci extension where you do this number like this. Boom, boom, boom. Probably something like that, which it's too cluttered for me. I don't like it. But in essence, that's the same thing that I'm doing when I put when I have my Fibonacci's like this. In essence, I'm doing the same thing, more or less. See, watch. Where'd it go? Well, I got it out. Go from here to here, pull back to there. See, there's 100%, 127.2. And then he just got it set at the 1618 or whatever. So I just like using this. It's just easier. It's less cluttered. The name of this app, this is Thinkorswim. It's TD Ameritrade Thinkorswim. It's their charting package. And it's free when you fund an account. So let's look at deck. Jose, when I'm finished here, I'll make you host. Appreciate it. Yeah, deck. Okay, we consolidate in here, but the best trade idea, notice how, I mean, if you had bought between 8 and 21 here, see that with the RSI over. So actually this first or second one would have been the best. And that's usually what I'll do is I'll go first and second. Well, actually with a failure to make a new high here, I'd be like, if I didn't catch it here, I'd be like, okay, forget it. I'm not going to do it. Unless we made a new low. But look at this, same thing. Zoom in. You have a drop, 1, 2, pull back, 3. See that? 1, 2, 3 pattern. This is my pattern. I love it. It's a 3-drive pattern. 1, 2, 3. Boom. And this is after, like 2 measured moves to the downside here. I like 3. And then when we see a bigger pullback, we get 4, or 2-sided markets, we get 4. But like, look at this. You have measured move, like this measured move. Notice how it's about symmetrical between here and here and this high and this low, as it is from here, pull back there. That's about the same length. But you got that 3-drive pattern. It's not as clean, but it's still a 3-drive pattern. Yeah, new low, pull back. And now when I'm trading futures, I'm looking for specific things too, like volume on this, volume on that, and that. Well, it depends. If it's pulling back, it's not so much important. But if I'm picking a bottom at extremes or picking a top at extremes, I definitely want to see that volume in there on each new high. But yeah, I mean, if you wait for that 3-drive pattern, the majority of the time, you're going to be right, and you're going to get less likely to get whipsawed. Every once in a while, you will. There's just nothing you can do about it. But if you wait for that, you'll have the less likelihood of getting whipsawed. Okay. So that would have been like the clean entry, and this little pop up here, right in here. I mean, as soon as we took out that high, you can hit it. Or, I mean, if you're watching this, As soon as we take out this high, you can hit it because this is a strong market. So that's what I'm saying. You almost have to be prepared for it. You see this, and at the end of the day, you're like, oh my gosh, if this takes out 248.5, I'm going to go long, and then have an order sitting there. And you can buy down in here. You can buy. As the market's with a buy stop, with a conditional order that says, hey, if DEC trades above 248.5, buy the 252.5 call option, or whatever, 255, 250 call option at market price, because it doesn't matter. You're so exhausted to the downside in the short term that even the call's not going to be as inflated as if it was if you bought it up in here. So right now, DEC, it needs to pull back. Okay. So, all right, cool. Scott's getting a lot of this. Nah, Teresa, you need a nap. Barbara, I'm new to all this. I know it can be overwhelming and it feels like you're drinking from a fire hose. But the more and more you do this, and you're in our session, like if you join the VIP trade room or join the Precision Profits and then you get access to the VIP trade room, then you're going to get this down more and more. And then when somebody says, "Hey, take a look at Roku," you're going to go look at it. You're going to know exactly. There's no guesswork. You're going to know exactly how to trade it.
Folks, let me be honest with you. The stock market can be very, very unpredictable, especially given today's social and economic climate. That's why you need a trading strategy that'll net you consistent returns year after year, no matter what life throws at you. That's really the key. That's where trophy trades can help big time. Stress-free trading methodology allow you to capture more of the stock's gains without leaving large profits on the table. Nobody wants to leave money on the table. I mean, nobody. And it works in every type of market cycle, every turbulent cycle out there. High volatility, low volatility, bull market, bear market, sideways market. You've got to check this out. Trophy Trades is the way to go. Click the link below. Learn for yourself. You will love it. I mean, you will love this. Talk soon.